Welcome back everyone to the best prop for you trading floor. Today we are looking at gold once again. I will keep the fundamentals short so we can dive straight into the technicals. The US dollar is soaring again after President Trump promised severe action against Iran, crushing any hopes of a reopening of the Strait of Hormuz. So because of the resulting oil surge, of course, markets have really slashed Fed rate cuts down to just 10%. Which is, of course, a pricing in of tighter monetary policy that is inherently bearish for gold. It's not just the Fed that is being priced in or priced out of rate cuts, they say. Also, the chances of interest hikes by the BOE and ECB are increasing to 2 and 3 respectively, which again is inherently bearish for gold. But here's a real warning for prop traders. Many markets are closing for the Easter holiday this Friday and also Monday. However, we still have the NFP report dropping tomorrow. And high volatility combined with very low liquidity is a very dangerous mix. Let's look at the charts. On the daily chart, all three Bollinger Bands, 1, 2, 3, are now pointing towards the downside. We still have actually, a very strong confluence between the middle Bollinger Band and the 50 Fibonacci retracement of this leg to the downside at 4,850, excuse me, where prices actually rejected before even getting there, about like, let's say, $50 below that level. And that, however, happened exactly when the RSI hit the 50 line. Okay? This entire structure, guys, resembles a massive flag. When we do get a flag in an uptrend, and look at these two rejections, this typically leads to a continuation. Okay? But the daily chart is not going to give us a short-term clarity here. So just keep that in mind. In the longer term, this could be a flag. Right now, we are watching the 38.2 Fibonacci retracement of 4,670. We could go and retest the 4,850. It's not like we cannot. And perhaps even push towards the 5,030, given that we managed to break above the 5K psychological resistance. But with everything looking more bearish than bullish, we need to drop down to the 4-hour chart to see what is making more sense. Now, down on the 4-hour chart, we see that the RSI recently hit the overbought territory. And that happened when the daily hit the 50 line, mind you. So that is the reason why the previous rally died out. We also failed to cross the 4,850 level that we've flagged last time around as an important breakout candle. Now, what's critical though is that the bottom Bollinger Band is looking up and the top Bollinger Band is looking down, and it starts to flattening out. So with the RSI at the 50 down here again, okay, if the local support at 4,600, and I will just do that with that peak over here, holds, we could see a short-term move higher, but I would be pulling out my resistance at 4,780 and not to the top of that band. If you ask why, it's because, as I said, we are actually turning in when we look at the Bollinger Bands, which suggests it's highly likely that we're going to see a squeeze, a tightening of these bands. So essentially, price action is going to be further contained. So we need to go down on the 1 hour. And look at the 1 hour. We had this divergence, and from the other side, we have had that rejection at the bottom, and momentum is now moving higher up. Now look at this. The Bollinger Bands here are obviously more expanded. However, they all again look down. What does this mean? It means that in case we move higher up and we come to the 50 line, we could essentially move a little bit higher also in terms of pricing. But look again, a high momentum candle open at 4,670. This is where I see a resistance for today, perhaps even for tomorrow. No one knows. And if we do break above the RSI, we could go to the 60 line perhaps. We could see the middle line acting as resistance. But here's the thing, if we come here and we reject moving higher and we reject the 50, then there's going to be a higher likelihood that we're going to see prices moving lower down. What do we typically do when we expect that to happen? We're going to measure the range of the Bollinger Bands, and we're going to place that to either the entry point or the breakout. Okay, so obviously between here and there, we're looking at 4,300 or so. We have the 4,400 support, and it really then depends on where exactly you're going to enter. If I were to enter, I would be looking to perhaps enter a bit early to ensure that I don't lose the opportunity. So I would be entering at the 4,670, that is a liquidity sweep, and be looking for a first target at the previous low with the stop initially just above the median line. Okay, very good risk to reward ratio. But essentially, when we get down here, I would be pulling my stop loss to the entry level and see how that plays out. If we come back to the 4,610 after initial drop, then I will close the trade for a small win. If not, and we continue lower down, I will essentially trail that stop, okay, and let it go down to the 4,400 and perhaps lower down. This is how I would play it. For our best prop for you intraday traders, the 1 hour chart shows that price retested the oversold territory. Let's not forget that. And we are heading back up to the 50 line, which is quite important. This first level of resistance is very important for the next few hours. If we reclaim it, I repeat, we could move all the way up to 4,785. But if we fail to cross that level and the 4,700 even, because that could be also another potential entry, we're most likely to go lower rather than higher. But let's not forget the NFP is also due tomorrow, so you want to be careful. So here are two ways to play this. The standard short is short here or the middle band, yeah, and wait for the NFP to see where exactly we are. This offers a good risk-reward ratio, especially if the NFP is positive. Actually, no, we're looking at gold, so if the NFP is a negative. If the NFP is negative, it would actually, hold on. We're talking about gold going up now or down. We're talking about shorts in the middle band. So it means that dollar has to get stronger, which would mean an NFP is actually indeed good. Yes, correct. So I'll be placing the stop above perhaps the 4,780. Depends on your expectations for the NFP. The aggressive sort is to go even in now, if that makes sense, and wait for prices to perhaps come down to 4,550 if they do so, because we could see an aggressive move down. We might see price go down initially, put you in profit, and then suddenly stop at support and reverse. So that's why I have to really pay attention at this confluence, because you've got price action as well as the lower Bollinger Band. Okay, so manage your trades actively to ensure you get out on time. if needs so. Protect the daily drawdown, survive the NFP liquidity trap, and liquidity trap one is here, the other one is up here. Okay, and well, I'll see you in the next breakdown.